Thanks for joining me on my market report. My name is Mike, and this market report is about mortgage rates, what goes into impacting mortgage rates on a daily basis. We come out with these reports on every day, Monday through Friday, when the markets are open. And I kind of want to share with you what's impacting rates, what's going into them going up or down for the day, if they're going unchanged. We don't go into rate quotes themselves. However, if you like a rate quote, just please feel free to reach me directly. There's just too many variables that go into a rate quote, and then of course there's different loan programs out there as well. And each loan program will have a different rate to those as well. So a little bit about myself. I am a loan officer. I do work with a national lender, so I can certainly help you, as I stated, the rate quotes. But if you got questions regards to mortgage programs out there, the process, or any of those type of things, please feel free to reach me. You're also, if you are looking to refinance or looking to buy and need the pre-approvals to buy, please again, we're here to help you guys. So without further ado, why don't we jump into this report? We'll start with the economic report. This week we had today and tomorrow are the 2 days with the highly impacted data that will be coming out. But we'll start off with what we get every week, the initial jobless claims. We'll start right here. So last week's report came out at 444,000 people applying for first-time benefits. Forecast was calling for 425, and it came lower than that at 406,000, which is obviously very good news right there. Another good news is that we're seeing the continued claims here, which I didn't highlight because it's not high impact, but the good news is that we're seeing that drop as well. So that means that people who are on the unemployment are dropping off, which is a good sign because hopefully that means they are out, they have now found work and back to work. Now, let's start up here. We'll start out the first quarter GDP. This is our second review of it. The final will come out in June. So we had a 6.4% annualized GDP for the first quarter. Forecast is supposed to have a slight uptick to 6.5, and it stayed unchanged. So decent. Obviously, we're still happy about that. We'll still wait next month. We'll get the final revision, so we'll see if it goes up or lower or remains unchanged. Now, we also got durable goods for the month of April. We had 0.8% increase for the month of March. Forecast calling for a 0.7% increase. However, it dropped 1.3%. Now, part of this, as you'll see here, now if you take out big ticket items like transportation, we had a 1.9% increase in the month of March. Forecast calling for 0.8%, and that one jumped up 1%. So as you can see, those big ticket items kind of really skew those numbers in one direction. So when you take those out, this is kind of what we get more of the core durable goods, which is a good standard as to where we are. So again, lastly, but we got the pending home sales for the month of. I'm sorry, this should be right down here. My bad. Pending home sales. We had a 1.9% increase month over month in the month of March. Forecast is kind of for a 0.8% increase. However, it dipped again, dipped by 4.4%. Now that obviously is due to a lack of inventory. We're down historically lows in terms of what's out there available. New home sales, people are trying to go towards new home sales. However, they are under huge constraints in terms of labor and the commodities like lumber and different things like that nature. And those guys are having some issues as well, trying to get those built. And just a lot of people just don't want to move yet. They're not comfortable moving. And then, we got a couple of different reasons. One, maybe they're still scared of the coronavirus. We got two, we got people potentially, thinking about where do they go. If they sell their home, okay, well, where do they go? Everything's gone quite skyrocketed. So with that in mind, let's move over to headline news, see what's going on over there. Stocks are up this morning. They're doing pretty well. They're kind of a sideways pattern. It didn't have a lot like yesterday. Like Dow only closed up 10 points. So we didn't really see a whole lot. And tomorrow will be the big one. Tomorrow, which will be the PCE data, which will be coming out, the Fed's favorite gauge for inflation. That should be part of the high impact and maybe a catalyst for this week where things are going to be moving. Now, part of this is, we still got Fed speakers out there, and they're still kind of waiting with talk about where the economy is, the high inflation. Will the Fed start tapering? Does that what does that mean? The Fed's been buying about $120 billion worth of treasuries and yields, or treasuries and mortgage-backed securities every single month. Now, are they, when are they going to start talking about tapering, which means they're going to stop reducing. They're going to start reducing their purchasing on there, and there's been indication they're not going to start talking about even till for several months down the road here. But there has been a few comments from higher up Fed officials that said that maybe now we could start talking about in the future about that future about when that will go out. So they're kind of in that nook of where things are at and kind of watching to see what the Fed does and listening to all these different Fed speakers and getting their prospective viewpoints for the next meeting. Are they going to start talking about dates of when they're going to plan to taper? Let's see how this is playing out in the mortgage-backed securities. Mortgage-backed securities are down 13 base points. We did lose a bit more yesterday. We broke below the 25-day moving average right now. We were down a little bit further as after I've done this, but we did come back a little bit. We had a 7-year treasury auction, excuse me, a 7-year treasury auction that came in pretty good, and we've kind of pulled back. We're kind of about the same level as you see right now, right at this point. But still, we did come back a little bit. So tomorrow we could see a pretty dramatic move one way or another, depending on that PCE number. So the last time we had the CPI report come in, we dropped quite a few points. We dropped at least 30 to 50 points as a result of that. I think it was right about here when that came out, or no, it was right here. I think this is what it was. We dropped quite a bit. We had a pretty big drop right here when that CPI number came out, and then we kind of worked our way back. We kind of shrugged it off and kind of worked our way back upwards. So again, be very cautious tomorrow. We do get that PCE number, and that could be very, very hot. It hasn't been as volatile as the CPI, just a little forewarning, but still, it could come in hotter than what they would like it to be at the moment. Let's take a look at yields, and yields too has broken above its 25-day moving average and top and trying to break above its technical level here. It's sitting just under 1.62, and again, this is where things are moving. Rates did worsen a little bit yesterday as well as today, and as a result, we'll have to kind of watch. Tomorrow could be, again, that catalyst as we're talking about inflation. All right, folks, have a wonderful day. Thanks so much for watching. And again, if you guys have questions, need answers, we're here to help. And if you like these videos, help out the channel by smashing that like button. We greatly appreciate it. And thank you very much. We'll look forward to see you guys in tomorrow's video. Bye-bye.